All right, let's get right into it. Something huge just happened. A massive shockwave just tore through the crypto markets, and you know what? The tremors were felt across the entire financial world. So let's break this down. First things first, just take a look at this number. $19 billion. That's how much value was just wiped out of digital assets. And this all happened in just 24 hours. We're not talking about a slow bleed here. This was a sudden, violent flash crash. So the big question is, what on earth could possibly trigger something this huge, this fast?
Well, the answer came completely out of left field. It was a surprise policy announcement, a proposed 100% tariff on critical software coming in from China. Yeah, you heard that right. And this one single political move was enough to totally spook investors. Risk sentiment just went into an absolute nosedive right across the board.
Okay, so we've got the trigger, but how does one political announcement turn into a multi-billion-dollar tsunami? That's what we're going to dig into right now in Part 1, the shockwave. To really get why this happened so incredibly fast, we have to talk about something called a liquidation wave. The best way to think about it is like a financial avalanche. See, when traders borrow money to make bigger bets, that's what we call leverage, they're taking a huge risk. If the price suddenly drops, they can't cover their losses. So what happens? The system automatically sells their stuff to pay back the loan. But that selling pushes the price down even more, which then triggers more automatic selling from other leveraged traders. It's just this vicious accelerating cycle. And this is pretty much that chain reaction laid out perfectly. It all starts with that tariff announcement, right? That creates fear. The fear leads to a massive wave of selling. And that selling just crushes anyone who was betting the price would go up. Those are called long positions. And then, boom! That's what triggers that whole cascade of auto liquidations we were just talking about. It just amplified the crash second by second.
All right, moving on to Part 2. And this is important because this whole crash, it wasn't just contained to crypto. Not even close. Let's talk about the ripple effect. Yeah, this quote right here really gets to the heart of it. For the longest time, a lot of people argue that crypto was its own separate financial universe, totally disconnected from everything else. Well, this event pretty much proves that's just not true. It is deeply connected to and super sensitive to these big global economic and policy shocks.
Actually, maybe a better way to think about it is that the crypto market acted like a pressure valve. Imagine all this risk and uncertainty building up across the entire financial system. Well, crypto is just the place where that pressure got released first and fastest. But man, when it blew, those shockwaves were felt everywhere. And you can really see just how far those tremors went. They smacked the stock market, hitting those riskier tech and growth stocks the hardest, right out of the gate. They rattled the foreign exchange markets as money started moving around the globe, and they even hit bonds, as you'd expect, because some investors started running for what they see as safer assets during a storm. Okay, so that's the what and the why it matters. Now let's pivot to Part 3, navigating the aftermath. So, what do we need to be watching for in the week ahead? Well, the short answer is expect turbulence. Seriously, the market is still trying to figure out what just happened, and that means investors are totally on edge. The markets are probably going to be extremely sensitive to any new information, whether it's good or bad. And on top of that, there are a few major risks just looming on the horizon. For one, there's a potential U.S. government shutdown. Why does that matter? Well, it could delay all that key economic data we rely on, like jobs reports and inflation numbers. And when that happens, markets are basically flying blind, which means they can totally overreact to even the smallest rumor. And of course, let's not forget the 100% tariff that kicked this whole thing off. That is still a huge, unresolved wildcard. And this uncertainty doesn't hit every part of the world the same way. You can see it here. Over in China and the rest of Asia, the market is just hyper-focused on any little hint of economic stimulus. Meanwhile, in Europe and the UK, growth is already pretty sluggish, so even a little bit of bad news could hit them disproportionately hard. And then you've got emerging markets which, as usual, are really vulnerable if global sentiment turns sour and capital starts to fly out. So when it comes to the crypto market itself, it really feels like we're at a fork in the road. Down one path, you've got the rebound scenario. This is the optimistic view, right? Things calm down, the market digests the shock, and prices start to bounce back, probably led by the big players. But there's another path, a deeper retraction. This could be triggered by another policy surprise, and it would basically reopen the wounds from this crash, pushing prices even lower. And that would be especially painful for the smaller, less traded tokens. So, how do we know which path we're heading down? Well, a really key thing to watch for is something called support zones. Just think of them as price floors. They're these levels where in the past, a whole bunch of buyers have jumped in and said, nope, not going any lower. This crash has pushed prices right down to some of these really critical zones. So whether these floors hold or break, that's going to be a massive signal for what happens next.
Okay, so if you're trying to follow all this, think of this as your dashboard of key signals. First, you're going to want to watch the liquidation data to see if that wave of forced selling is finally over. Second, keep an eye on on-chain activity. That's the raw data that shows you the real-time health of the network. Third, you've got to watch the institutional fund flows to see what the big players are up to. And maybe most importantly, you have to watch how the price reacts when it hits those key support zones we just talked about.
And that brings us to the one big, crucial question that's hanging over absolutely everything. Was this just a violent, but maybe healthy market shakeout? You know, the kind that clears out all the risky bets and paves the way for the next move up? Or is this the first tremor before a much, much deeper earthquake? I guess the next few days are going to give us our first real clues.